Okay, good evening, everyone. Tonight we'll be talking about supply and demand. Supply and demand. How to mark supply and the use of supply and demand. Okay, can someone here please give me a short definition on supply and demand? Anyone here, please?
Supply is the point whereby you sell from that zone, then
Okay,
demand you buy,
Odogu.
just like support and resistance.
Okay, anyone here, please? Apart from that,
Supply is an area. Supply is when sellers sellers are where there are more sellers. Then demand is where there are more buyers.
let's just accept that, though. And let me say, demand is uh where the buyers kept their money. This is where they kept their money. Then why supply is where the sellers kept their money. So they will have to come back for it and move. So now, many people know supply. Many people don't know supply and demand, but what they know is order block. Let me just categorize order block as supply and demand. Also, let me just categorize it as supply and demand because that order block we are all seeing has many activities given. So if order block did not have any activities given to us, we will not be emphasizing much on order block. And there's something I call area of transaction. Now, like this area is a supply zone. Eh, And why did I call it a supply zone? Look at it. There's a fight between buyers and sellers. There's a consolidation. There's a ranging part before sellers expand. So this area is supply zone. This is where price supply, the move. Price supply, the move here. You can see we are supposed to buy from here. And the norms, we have a book of structure. So we are supposed to buy from here, boss. This supply was this move, this trend from here. So this area is supply zone. But that's not where I'm going to now. Whenever we analyze, let's say on a daily time frame or a shorter time frame, how do we identify our supply and how do we identify our demand? How do we identify our supply and how do we identify our demand? Okay, let me start from 4 hours time frame. There's something about structure which I told my old students and new students. If you watch the previous video I sent to you guys, you understand that secret behind structure. I said whenever you want to analyze, apart from weekly, let's say daily and 4 hours. And now let's come to 4 hours. 4 hours is what? Is a structural leg. Any structure formed on weekly and daily, 4 hours is going to give you full definition of those overall structure. It's a structural leg. And now, when you analyze on 4 hours, it is good also to mark your supply and demand from 4 hours. And now, how do you identify your supply and demand? Okay, let me call this place also. Let me call this place also. Now, how do you identify your supply and demand? Now, look at this structure. Look at this trade here. We have ounce of liquidity. This is not a break of structure. But on the norms, if you want to categorize it, this is week to week break of structure. But it's under liquidity. So whenever price on a low like this, the target will be this previous high. Whenever price on a low like this, the target will be this previous high. It will target this high. But before you get to this high, you will see enough shege. And the reason why I said we are going to see enough shege is there are many suppliers. They are what? They are sitting around all this area. Now look at this trend. We have amount of liquidity and break of structure. In fact, we have inducement. So you cannot omit this place. If you don't take note of this area might cause a big problem for you. If you are thinking you want to buy for a very long time to clear this high, what if this area reject price and continue selling? Because we have a break of structure, we have out of liquidity, and we have inducement. But so far on 4 hours, we know we are buying long because we have out of liquidity. If you should go to shorter time frame, this week to week break is going to be body to body. But on 4 hours, it shows week to week. If you should go to 1 hour, 1 minute or 5 minutes, you see body to body break. Fine. We have out of liquidity. Yeah. We have out of liquidity. Where are we targeting? We have this high. Yeah. We have this high here. Before I can confirm a long buy, I want price to break this high on 4 hours time frame. Yes, because look at this area. We have lower high, lower low. We have break of structure, and this can stand as inducement. And apart from that, we have imbalance. I'm not talking about imbalance, but I'm going to talk it alongside. We have imbalance here. Look at this level. From here to here, we have what? Imbalance. We have imbalance. What if price enter this imbalance, feel this imbalance and start selling? So I will patiently wait for price to break this 4 hours high. It will not take a long time. Let me just say within a day or 2 days, price is going to break it. Yeah, let me just say a day safe. So I'll wait patiently for price to break this high. Now I have on shorter time frame, I might see a ride, a ride like a confirmation entry to this 4 hours fair value gap. Yes, I can trade it. You can also trade it. Once you see a confirmation, once you have this amount of liquidity, once you see a confirmation and you have this imbalance on 4 hours, once you are buying, just know that your take profit will be around this place because price can enter this imbalance and start selling. But once price break this high, just know you are looking for a what? A long buy. Now let's see. Can you see? Price entered and what? Sold a little bit. This candle on 15 minutes, it is going to be a long sell. Can you see? This candle on 15 minutes. This 4 hours candle. Imagine you hold a trade up for good 4 hours with good momentum. That's money for you. So now let's see. We have a break already. We have a break of this high. Now, where is our demand here? How do you mark your demand? We have a break of structure. How do you mark your demand? And you know, from external rich liquidity to internal rich liquidity. Now here, where is our internal rich liquidity? Price has cleared this external rich liquidity. Price has cleared this external rich liquidity. Where is going to be your next internal rich liquidity? This low. It's going to be your next internal rich what? Liquidity. And where is it going to be your demand? This candle, this guy, this this what is the name of this candle? These people that used to use price action. I've forgotten this candle name. This candle, this huge candle is going to be your demand. Yes, engulfing candle. I remember. This engulfing candle is going to be your demand. Now, how do you mark your engulfing candle? Look at this last sale. I can't categorize this as my last sale because this is what? This is indecision. But let me just mark it because it is also a sell candle. And there's an activities that occur here. For this rejection, there's something that occur for this rejection to show. If you should go to shorter time frame, you see that there's a sell before this buy started. There's a sell here. So if this should be my liquidity and this is my demand zone, I'm coming. Let me unmute some people also. In case you want to start applying supply and demand to your trading. So this is going to be my demand zone. Why did I say this is going to be my demand zone? This is where this massive buy started from. And this guy was the one that broke this previous what? Sell. This candle, this engulfing candle was the one that broke this last sale that occur. So if I'll be marking it, I will not mark everything as my demand zone, because if I'll be marking it as my demand zone, I'm going to mark everything like this as my demand zone. So let's say I want to be buying from here. Let's say I want to buy from here. Let's say I want to buy from here and put my stop loss at the back, or more. Let's say like 92 pips. It is very, very risky. So this is not, I will not mark it this way. How am I going to mark it? From this low to this high. From this low, from here that is, it started from to this high. It broke this candle. So I'll mark it from here, from this low to this high. That's how to mark your what? Your demand zone. So that means you have already marked your demand zone out. From this low to this high. You don't need to mark everything. And if you use Fibonacci, you see it is like 50%. Can you see? Like 50% of it. So if you are marking it from here to this high, it was the one that break this last sale candle. This candle, this one did not break this last sale candle. Assuming this one was the one that broke the last sale candle, I would have considered this place as my demand zone. But this candle was the one that what? Break the last opposite sale candle. So this is going to be my demand. So I'll mark it from this low to this high. So if I'll be buying, if I should go to shorter time frame, let's say I move to shorter time frame for confirmation. If I'll be buying, look at this area on one hour time frame. Look at this area on 1 hour time frame. If I want to take a risk entry, I'll take it this way. When we get to entry pattern, I'll explain this thing. When we get to entry pattern, I will explain this thing. I'm coming. I'll still cut it back. Can you see? Price make use of here and what? Boom. Move. So let me cut it. That's not where I'm going to right now. So now on 4 hours, I've already marked my what? My demand zone from year to year. I've already marked my demand zone. I will not be buying instantly. I will have to go to shorter time frame to wait for confirmation. And you already know the confirmation. I'll go to shorter time frame to wait for confirmation. But now, I when I move to one hour time frame, I saw this area. This zone, this is a valid demand zone. There's something we call S&R. Let me type it. Support and resistance. So we have S&R entry. So if I'll be using 1 hour entry, this candle until this what? This one. And we have a week, unmitigated week. Why did I say this is unmitigated week? Look at this. There's a sell occurring from here. Let's say there's a sell occurring from here to here. But when this price got here, something rejected the price back with massive move. You can see this week. Something rejected back instantly. So for price to got rejected here, there's a big transaction that occurred here. And this low, there's money around here. The banks kept their money around this low this week. So if I'll be buying, if I'll be taking a risk entry on what? On 1 hour time frame, I'll be using this what? This week. The open of the candle and this low as my stop loss. If I'll be buying on 1 hour, if I'll be taking S&R risk entry, this is it. You see that price is going to tap and move instantly. Liquidity and boom. Can you see? Instantly. So I divide my what? My demand from what? 4 hours to 1 hour. But that is going to get you confused. But let me now go back to the 4 hours again. There's a reason why I'm recapping, because I know I have someone here that don't understand once. So after I've marked my what? My demand zone on 4 hours, where is it good for me to look for entry? Let me move to 15 minutes straight. you need to move to what? 15 minutes. Now you know you have already marked your what? Demand zone from 4 hours. And the reason why it is very good to mark it from 4 hours is because if you should go to shorter time frame, most time you will get confused of the what? The point of interest to use. Now, some people will mark here, some will mark here, alaye mark, some will mark here, some will mark here, some will mark here, and here. So now, which one do you want to use? You get confused. So that is why it is good to wait for what? Confirmation. And about that, apart from you waiting for confirmation, now define this structure. We have higher high, higher low. If you should check this place very, very well, it has been mitigated. It has been mitigated. See this week and this week, it has been mitigated. And price broke a structure. This place also, price has mitigated this week. Now we have another break of structure. Price came back and mitigated what this week. Because if you are meant to mark your demand here also on 15 minutes time frame, this candle was the one that break this last sell. So if you are marking it, you mark it from the low to the high. Can you see? So let's say you are buying from here. You have to mark it from the low to the high. Let me cut it. Let's say if you are buying from there, because this is the demand zone. But how am I going to mark it? From the low to the last sell candle high. Then, so if I'll be buying, this is how I'm going to set it. And let me target this high for the 2 pips. Let's see. Can you see the mitigation instantly? Price mitigated it instantly and what? Move to your direction. This place also has been mitigated. You have another break of structure. Price came back. Price has not mitigated this. And it's created what? Inducements. Are you with me? But if you should go to lower time frame, like 5 minutes or 1 minute, you see that price make use of something around there before moving. But on 4 hours time frame, I am going to wait for a confirmation before what? Before taking that trade. I am going to wait for what? For confirmation. And the confirmation I'll be waiting for is going to be around 15 minutes time frame. So once I see that price has come to 15 minutes time frame point of interest, what am I going to do? What confirmation am I waiting for? I'm coming, please. Okay. Now this is demand. And looking at this demand here, see 4 hours demand zone. See where the 4 hours demand zone is on 15 minutes time frame. See where it is on 15 minutes time frame. It's indicated that this area is valid. If you should check 1 hour also, we have S&R entry. 1 minute, 1 hour unmitigated weak entry. We have it here. And checking 15 minutes, we have this point of interest around here that has not been mitigated. And we have inducement below it. If you have inducement here, price doesn't need to start going down. But assuming we don't have inducement, price can use this area as inducement for another point of interest that has not been mitigated. But you have inducement here. So even though you are taking a risk entry, this inducement has given you a confidence of taking the trade here. Because once price induce this thing, it is not going down further. It will come back to what? To come and fill the what? The criteria. And here, this is 4 hours demand zone. Also 1 hour demand zone. Then on 15 minutes, it is a demand zone also, unmitigated area. Then where are you targeting? The last high I told you about. And you have inducements. Apart from that, there's a way you can get your entry. Look at this area. We have a flip entry. This place is filled. It has filled us already. filled. This place has filled us already. And why did I say this place has already filled us? Why did I say this place has already filled us? Look, we have a zone here that this place mitigates. It's mitigated something here, and it failed to break a structure. It failed to break a structure, then it got broken. So we have a BMS. This is a flip entry. This area is a flip entry, and we have inducement. So there's more tendency, there's more confirmation here, even though you are not waiting for your trading confirmation. This place has given confirmation already that what it is going to be valid, because you have a flip entry with inducement. We have an inducement above it, and with from 4 hours time frame, this indicated that our demand zone started from here. Same on 1 hour, it started from here, and 15 minutes, it is a flip entry that has inducement. So I don't need to start looking for down. All these things, they will still come and mitigate. Price will still come and mitigate them later. Price will still come and mitigate them later. But we have a flip entry here with an inducement. Meanwhile, from 4 hours time frame, we defined our structure from 4 hours time frame to 15 minutes. And here on 15-minute time frame, we are seeing a flip entry with inducement. So there's probability that price is going to use here first to go. Then if you are not sure, there's a way you wait for confirmation. Now let's see. I'm coming, please. Okay, you can see what price did there. Mitigated. Then what? Boom. It is going. Now, if you can't wait, if you can't take this kind of entry, look at this point of liquidity, and we're expecting you wait for a break of structure. If you can't wait for this kind of entry, since you know where you are still going is still far, you have a long way to go. And precisely, this is a strong eye also. Don't forget we are targeting this eye, but this is another strong eye. Amount of liquidity, break of structure, it has inducement. At least you can target here first. As a what? First take profit. Now, if you can't take this kind of entry, you need to wait for what? A break of structure. We have amount of liquidity. Then once you have a break of structure, then you can risk your what? Your entry. Can you see? You are still waiting for confirmation here. Now you have a break already. You have a break already. Looking at this area, you will define your structure. Lower high, lower low. Lower high. This place could run from another lower low to cause a BMS. Then we have a break of structure. Has this place been mitigated? Yes, it has been mitigated. This area. Why did I say yes, it has been mitigated? Look at this candle. This is the place I am supposed to mark. Because this candle broke this place. So I am supposed to mark this place as well. I was all mitigated area. But look at this candle. See this week. See this week. This week. This rejection. It shows that there's a transaction that will occur around here. Around this place. From year to year. To this candle. There's a transaction that will occur around here. That caused this rejection. There's a transaction that will occur around there that caused this rejection. So if I have a break of structure to this eye, like say I'm risking a buy, this is where I'll be using as my entry. Not this other block anymore. Why did I say not this other block anymore? This place. Bank kept something here. There's a money around here. So they know that many traders, many other block traders will be expecting price to come back here. And they will not feel like, oh, I missed this trade. The trade did not what trigger. Why? Because there's something that will occur here. There's a transaction that will occur here. And see this week, the rejection, it shows the rejection. So this week indicated that there's something here. So even though buyers are coming back, they are going to use this week because there's money there. So at first, can you see? This place has been mitigated. Now I have another what? Another break of structure. This is another demand zone. from this low to this high. Can you see? From where it's open to where it's break from. So if I'll be marking my demand, I'll mark the low, the open candle, and the opposite candle price what broke. Let's say I don't have these activities here right now. This is another confirmation for you. Even though you don't wait for this high to be taken out, you have this amount of liquidity and you have a break of structure. Once you have this amount of liquidity and you have a break of structure, price is telling you that you are free to ride me before you break this structure. It is not every time you wait for this high to get what break, because there are sometimes price will break this high and it will not come back for a retracement. So we have amount of liquidity and we have a break of structure, and this is my demand here. This candle is my demand. This one is not my demand. This is the other block here. But how do I mark it properly? How do I mark it? Now, if you are marking it, you can mark it to what? To the body. To the body. But mostly I use weak. Why did I use weak? It's because of imbalance rule. There are sometimes price will not come back to this body. It will make use of this word weak and go. So if you use this body, you not like it will touch the weak and what leave you. But there are sometimes price will still come to the what? To the body. But since I know my entry, I don't see reason to be refining, looking for sniper. Since I know what I'm doing is right. So if I'll be buying again, since I've spotted my confirmation out of liquidity and price even got here, could not break this low. This was coming back. I have out of liquidity. This was coming back, could not break this low, and it's broke structure. So after breaking this structure, this is a minor structure. And I told you about minor structure. This is a minor break of structure. So I have minor break of structure. This is going to be my what? Entry and my stop loss. It'll be at the back small. Then I'm still targeting that high. I'm coming, please. I'm still targeting what? The high. This is over what? 371 pips. 371 pips, if I'm not mistaken. Now, this is my what? My demand. Then I'll be waiting for price to come back there. Can you see? See the sniper. Now, for those that use this body, they'll still be waiting for price to come back. Main reason why I don't use body almost every time, unless this body did not have any wick, unless this candle did not have any wick, that is when I'm going to use the body. But since I have this wick, I will use the wick, because price will just tap the wick and go. And for people that are still waiting for price to come here, they will miss the trade. So since you know this is your demand zone, you don't have any reason to start refining because you want to see sniper, or because you want people to be calling you sniper entry gang or sniper entry master. So now let's continue. You have a break of structure. Now for traders that cannot take this entry, you can see how we got our entry from here and started going. Now for traders that cannot take this entry, we have a break of this high already. How do you pick your entry again? How do you pick your entry? Now, you know, from external liquidity to internal liquidity. Now, price has broken this external liquidity, which was here. Price has broken this place. Now, where is our next internal liquidity? Now, divide drive. This place has been mitigated. This place has been mitigated. And we have high, low, high, low. Can I call this place my internal liquidity for this area? For this area, because we have another what? Imbalance. Let me delete this thing. We have another imbalance here. So can I call this place my internal liquidity for this area? Or can I call this area my internal liquidity for this area? Now you get confused. You get confused around here. That is where you need a what? A confirmation and patience. Let's see where price make use of. You know, I told you something about break of structure. It is not every time our price come here, price will what? We come back instantly. So for traders that has been waiting for price to break here, You can see now, price boosted them and start going up. It has given entry here, you miss it. It has given another entry, you miss it. So if you are waiting for this high to be taken out, there's tendency that you miss the trade, because this is another structural high. So this place has given you a confirmation. It has given you confirmation, and you know the target. This buy you are taking is from higher time frame. This buy you are taking is from what? Higher time frame, and you have seen confirmation from 4 hours, even to 15-minute entry. This thing you can refine it to 5 minutes. You can refine it to 1 minute as you like. It depends on the time frame that suits you. Are you getting it? So now, if you are waiting for this high to be taken out before you trade, now see it. Price broke it and what? They now come back. After it has given you confirmation here, it wanted liquidity. It came back here safe. Could not break this low and give you a break of structure and mitigate. Then there's a tendency for price not to come back here again. Now, another issue. This area mitigated what? This breaker block that I told you about. Can you see? So this is another entry. So if you miss here, this is another entry for you. So this place also has been mitigated, going like that. So you can see how I bring out the demand from what? From 4 hours to 15 minutes. Let's see. Maybe the final TP hits. Open that your phone will be ring. If you go take out your phone. And now we'll still be waiting, because all these low are still valid. But it's not every time price will come back immediately. That's why I said, I told someone something yesterday. I said, it is not every time you wait for price to come back immediately. Price will give you another structure. And now let's see this structure here. Let's see something. See this eye. See this break of structure. And see this flip. See this flip entry. Price reacted to this supply zone, to this area. And what? It failed to what? To break a structure, and price broke it out. So this area stand as what? The flip zone. As entry. This is the inducement here. This is the inducement here. See, flip entry with inducement, it is always sweet if you see it too. If flip entry has the inducement, it is always sweet. Now, see the inducement. This is flip entry, failed, and what? Broke. This place has turned to our what? Point of interest. And see the inducement, price mitigated. And now, apart from that, if you cannot take this kind of entry, now we have a QM. And where is the QM? See this amount of liquidity and break of structure. Amount of liquidity and break of structure. Now, let's say price has cleared this internal what? External liquidity. Where is our internal liquidity here on 15 minutes time frame this week? Is our internal liquidity. And this is my what? Point of interest. So even though you fail to take this kind of entry, there's another entry here. Instead of you should be waiting for all this low. Instead of you should be waiting for all this low. This is our entry. And how do you mark your demand? Now looking at this 15 minutes time frame. Looking at this 15 minutes time frame. Now, this guy, this candle, was the one that caused the break of this structure. Number one. It was the one that caused the break of this structure. It was the one that caused the break of this supply. Because this is a supply candle also. This same candle you are seeing is a supply candle. So this candle was the one that caused the break of the structure. It was the one that caused the break of this supply. So this is the demand zone here. This candle, the whole candle here, is the demand zone. But how do we mark it? From the low, from the opening to what? To what? To the break. Well, most time I don't use the body because of weak entry. So I use the weak. Now, if you see it, we have equal low. It is not every time also price will come and clear equal low or liquidity. Now, this one already entered liquidity. I don't expect price to come and read it also, even though it is triple low. If it is 5 equal low or double 50 quickly low, any English you want to use for it, I don't want price to come and read it because this low has entered liquidity. It has turned to a what? A strong low. So on the norms, I am supposed to use here for my stop loss and here as entry. But I will not be using this body as stop loss. I'll be using this week because price can come to this week here as entry sometimes. Price can come to this week as entry. And here we have what? Imbalance. From this place to this place, we have imbalance. So there's no reason for price to come down. No reason, again, for price to come down. So if you're analyzing, you take note of what you are doing. You don't need to rush. You take note of what you are doing. Now, we have see this imbalance, this low, and this high. When we get to imbalance and inefficiency, I will explain better. So you can see there's a void, there's an imbalance, there's a gap here, sorry. There's a gap. This candle this week is supposed to fill this wealth, this one. But it could not fill it. So there's a gap. So I have no reason that price has no reason to be coming back down. It should just fill this what? This place and what? Move. And look at it. We have internal rate liquidity for it. After price has cleared the external rate liquidity, price will come to internal liquidity. So for you to be waiting for all this move, you have a flip entry already. A flip entry. So this place is at the work. What is at the one working right now? It is the one working. Is at work. It is the one controlling the what? The price movement. So for you to be waiting for all this area, it is like you wasting your time. Though price can come here anytime soon, but not as soon as you are thinking. Because it is not immediately price break structure. Sometimes it will come back immediately. Sometimes price will go for many days or week before coming back. And if price is coming back, that doesn't mean because it is unmitigated area and you should set your entry straight. Price can use it as inducement, liquidity, because it returns to a weak point of interest. For price not to use it immediately, when price is coming back, price can read it. Because if you are valid, price needs to make use of you instantly. You can see when this place broke a structure, price came back instantly, no cap. That means this place is very much valid for price. So if this place is valid, price should come there. Price should not read it. So now look at this place. We have a flip entry. This place filled us. A supply that filled. We have a field and we have what? Inducement. This is a flip entry. This place has been mitigated and we have a break of structure. This place wanted liquidity and imbalance. So if I'll be setting another re-entry, I'll be making use of what? Yeah. I'll be making use of yeah. Where am I still targeting? That same eye. You can see we have been targeting the eye from this place to this place, the way we are getting our entry. That same eye. So now I've marked my demand. If you are using the full body, you may miss the entry. But look at this place. We have imbalance. So price will make use of here first. Before making use of the body, price will still make use of the week. So price can now break structure and come back for the body or whatsoever thing. I don't know. But price will still make use of what? The week. Now let's see. So for you waiting for this place, you have seen another structure here. So no reason to be waiting for here. You can take a trade around here because it has given you a structure. Price can decide to give you structure anywhere. It doesn't matter it's come back to this area. Price can abandon this structure and create another structure, another valid structure for you here. So we have this internal liquidity and we have this proper point of interest. And here, can you see? In fact, price make use of the body. Can you see? But as for me, I'm using the week. Because here, assuming I use the body here, I will miss the trade. So I'm using the week. And can you see how price mitigates and start moving? We have another break of structure. How sure are you that price is going to come here again? How sure? You don't know. You don't know. So price can feel the what? The gap and what? Break structure and start going to the direction without coming back here. Can you see? Yeah, that place. Moti Ranuba, Moti Ogolo, Hallelujah, Hallelujah. Now, look at this angle. We have high and low high. Now, if you are supposed to use this place, now this is the structure that we are expecting price to come in. But this structure did not form inside any structure. Did not this thing, what caused this thing here? This is a flip. Yes, this is a flip. But look at this structure. It's quite different from this one. Fine. This flip has inducement. So we are expecting price to make use of the what? The body. And start what? Going. But there are some time they will want to come and pick their money that they kept in the week. See the week entry. But if you use the full body, you are still right. Because your stop loss will be at the back here. So now, see the flip again. The same thing. Failed. After failing, we have what? External liquidity has been taken out. We have internal liquidity. And this is our point of interest. So from here, we'll be buying again. Because we have inducement. We'll be buying again. And you can see, if you have set your entry around here, even though it is going to play with your emotion, it is going to tamper with your emotion, your stop loss will be at the back. But on 15 minutes time frame, you don't want to take this trade. Why? Because the stop loss is too much, 17 pips. So you personally said we want to wait for what? Confirmation. So if you go to 5 minutes or 1 minute, you see confirmation. Then when you see that this stop loss is too much, you can just leave it for another what? For another structure to be formed. Now see this break of structure. External liquidity have been taken out. Where is our internal liquidity? This place. It's the internal liquidity. Then where's our what? Demand zone. This is our demand. Where am I going to mark it from? From this low. From this low to the what? To this high. Can you see? Then I'll be taking my trade from there. Since this place is high for me. But if I should see confirmation on 1 minute time frame also or 5 minutes, I will take it. Since this place is high for me, then I'll be taking my trade around there. I think this will still give me a good 10 pips. So I can still take this 10 pips and I'm still targeting that same high. Can you see the way I'm taking entry from year to year continuously using demand concepts, break of structure and demand zone? That demand is also known as the other block. This part, this opposite candle is what you call the other block. The other part is what you call the other block. So, can you see we have another break of structure? We have another break of structure. After having this break of structure, where is the internal liquidity? This low. That's the last low. That's the internal liquidity. Then, where is going to be my entry? Yes. Let me give you another thing. Now, look at this place. Look at this thing. We have what? Other block. We have this demand. This demand what? Broke this one. So if I'm meant to use to mark it, I'll mark it from here to here. But can you see that this price did not come back and mitigate this thing? Why? It's because we have a breaker block. And what did I mean by the breaker block? See this supply zone. Apart from this supply zone, this high haunted liquidity. This high haunted liquidity. It haunted liquidity. Let me draw it very, very well, please. It mitigated something here, haunted liquidity and broke structure. This is a structure on its own. If you go to shorter time frame, you see that this place is a structure and broke structure. Now, this place is another supply. Why did I say this place is another supply? It mitigated something and caused the break of this what? This place. And it's haunted liquidity, so it is strong. Very, very strong. This area is very, very strong. This candle, it's wanted liquidity and cause break of this what structure. It is very, very strong. So even though I have a break of this structure, let's say I have a break of this structure to the downside, this is where I'll be looking for what? A sell from. The way I have this break of structure, this is where I'll be looking for a what? A sell from. And now after this place failed me, it returned to what? Breaker block. And what did I mean by that breaker block? A supply that turned to demand. This is a supply. Now it's returned to demand. So waiting for here, I have a reason to use here. This place wanted liquidity and broke structure. Yeah. So I have a reason to use here. So even though I'll be using here, where am I going to put my stop loss? At the back here. This candle, where it's broke from. I will put my stop loss at the back. Or silver stop loss, 13 pips. But it is too much. So it is better I put my stop loss at 7 pips. Breaker block. The reason why I did not wait for year was because this candle has many conflicts. It's wanted liquidity and broke structure, but price failed it. So it has failed us also. So it returns to breaker block. Then move. Where am I targeting? I can target this eye first, or that I'm looking at. But don't forget, this breaker block will now turn to inducement. When price is coming back, if price is going to read it, this breaker block is going to turn to inducement. For this what? For this demand, for this proper demand. Sometimes if price use breaker block, just know that that breaker block, this place that mitigated the breaker block is going to turn to inducement for this proper demand. When price is coming back for it, it is going to turn to inducement. Now price has broken this structure. After price broke this structure, look at this higher high, higher low. You define the structure sometimes. Look at this. Higher high, higher low. Price mitigated here. And the structure was like this low will turn to inducement. That was the structure I told you guys. Can you see? That was the structure I told you guys. And this place mitigated the what? The breaker block. After it mitigated the breaker block, it caused a what? A break of structure. Even though I'm looking for a buy here, it is very risky. Because I know this low will turn to inducement. I still have unmitigated what? Demand. This demand has not been mitigated. But price only mitigated what? The breaker block. So I have this unmitigated what? Demand. So I will be expecting price to still come back and mitigate the demand for me. Can you see? Now, if I take the buy from here, once I know the I know the use of what? Breaker block, I can still take the buy from here and what? Read this eye. Then after reading this eye, I what? I will wait for I'll wait for price to what? To come to this demand. Because I know this piece will turn to inducement. And can you see? That's also inducement for the what? For the proper demand that has not been mitigated. And I'm going to what? To my next eye that I'm targeting. Yeah, I know a good volatility will come. Yeah, I know from here a good volatility is going to come. My first target, this range eye, this week eye, is going to be my first target. You can see 93 pips. At least this 93 pips is good for a day. And let's see. Can you see the power? Now, breaker block, we use the entry of breaker block to read this high. When price is coming back, this breaker block entry will turn to inducement for this demand zone. It's going to turn to an inducement for this what? Zone. As you can see, CP it successfully, but I still know that we are targeting one high. Can you see that the structure I was following was from 4 hours time frame? From 4 hours time frame. On 4 hours, I have every right to wait here because I noticed it was a valid area, a strong eye on 4 hours. So everything I'm seeing here, I will not take note of anything here. Everything here will just cause a little retracement. This place also safe. Price is going to take it out because this is the high I'm targeting on 4 hours. But at least let me first take my TP from year to year. That's 370 something pips. It is enough. If you have good accounts and you trade it, that's good money for you. Let's see. We have another break of structure. You can see I've not moved to shorter time frame. 15 minutes. I've been using 15 minutes. I value 15 minutes than any other time frame. But I'm going to teach you how to go to 3 minutes, 5 minutes, 1 minute. Yes, I will teach you everything here. So you use any time frame of yours, anyone that favor you, anyone that you like. Now, I mark something here. This place has been mitigated. Why did I say this area has been mitigated? See this candle. So this week, there's something that caused this week. So that place has been mitigated. Can you see? Price gets here. Clear this breaker block entry. Use it as an inducement for this. But proper demand that has not been mitigated. And boom. Break of structure. Where's my internal range liquidity? Let's say this is my internal range liquidity. Price can use here or whatever. Boom. Price clear me out. See the sale. That is why it is very good to target every week high. Now, swing traders now. Someone that just wanted to swing this trade, that pick entry from here. You can see how price read them out. So, assuming this person has targeted this high, you are out already. Everything you'll be targeting is all those weak high. Whenever you are trading, you don't need to be targeting far place. As an intraday trader, just target the weak high. At least from year to year, we have 94 pips or 93 pips. Let me calculate it. 95 pips in a day. That's enough. Now this thing is coming back for this point of interest. I guess it's coming back from something here. Let me check. If I'm not mistaken. Okay. I guess it's entered this liquidity, it's entered everything here. It's entered everything here and start going back. So what they wanted to create here is just point of liquidity and start going back. But I still feel like it will still
Hello.
come down.
Okay.
I'm going to let me some guys. Okay, I'll meet some guys here. Okay, so that's how I mark my supply and demand. I always students say I don't need to start. I already taught them this. And now my supply, how do I mark my supply? Let me go back to 4 hours time frame. She share your laptop you are connected situation. Now, how do I mark my supply also? I mark it the way I mark my demand. The way I mark my demand. Let me look for an example. Tomorrow, I'll just be explaining how I pick my trade through and demand. I will send all on supply and demand to you guys tonight for the new students to go watch them. I'm looking for an example, a valid example that will okay. Let me make it of here. Please, can you guys see my screen?
No, sir.
Yes.
Pause.
But I don't know, maybe it's
You
my
cannot see my
side. I
screen.
can't hear
We
or
can
I
see it,
did
but it's not moving any longer. Okay, it's still moving.
You can see your screen.
Can you see it now?
but it's not moving.
Yes,
I
sir.
don't know if it's my own.
All right. Now,
Yeah,
there's a way I mark supply,
it's moving a little.
the same way I mark demand. Now, break of structure, and
But boss, the thing is not moving well.
look at it. That's your network, though. See the amount of liquidity. That is very what? Very, very valid. This zone has turned to what? A strong line. This place has turned to what? Strong. Even though I'll be looking into here, I'll look into here first. On 4 hours time frame, how do I mark it out? This candle, this sell candle is my what? Supply zone, not this other one. This other one is what you call order block. Then how do I mark it? From here to here. Then once I have finished marking it on the network,
It's not moving.
I'm coming, please, guys. Mo ti ránu gbà, mo ti rógolo, hallelujah ìwọ̀rọ̀rọ̀, hallelujah, mo ti ránu gbà. I'm coming, please. So now, hello, can you guys see my screen?
Yes.
Okay. So now, how do I mark my supply? This candle, this sell candle is going to be my supply. Why? It broke this one, and it caused a break of this low. So if I'll be backing it, I won't trade it straight from what? From 4 hours time frame. No, I'll have to go to my shorter time frame. If you like trading from 1 hour, if you like trading for 45, 30, or 50 minutes, well, I prefer trading on 15 minutes. And I'm going to go to 15 minutes time frame. Now, looking at it, where is my point of interest around this 15 minute time frame? Where's my point of interest? This is my demand zone. So here, I think I have an inducement. I have an inducement. Then from 4 hours time frame, I got this area, this unmitigated area on 15-minute time frame. So if I'll be taking my entry using confirmation, I've already marked this place out. That means I've refined my 4 hours what? Entry to this area. This is 15 minutes flip. 15 minutes flip on price break is 50 minutes flip. So, and it has an inducement. It has an inducement. So even though I'll be selling from here, let me check the risk to reward. This 20 pips. So I'll not be taking the trade. I'll wait for a confirmation around it. And how do I get my confirmation? Let's wait and see. This is my range low. I'm here. Network, allow this thing to play now. This is my point of interest that I'll be targeting. This is my TP. I'm waiting for you to play out finish, oh, please. The network is fucking bad. Yeah, this is my next road there. I would have tell you how to get all this entry, but that's not what we are trying to do now. If not, now can you see price has not come here at all? There's a way you get all this entry also. There's a way you get there, but that's not what we are doing now. Now, can you see price has gotten there? Even though I use the straight entry, I'll be taking out. Reason is that this point of interest, I don't know what they want to use. So even though I'll be using here and put my stop loss at the back, I'll still be taking out. Can you see? And this was a trap. This is another hunt. I'm coming. We go to school or chasing general spelling. Hey, network. Okay. Now you can see it's mitigated properly. Then it started what selling. Now we have a break of structure. So the downside. Let me just call it a break of structure. This structure is not clear enough. You have something like this. You have something like this. You have something like this. And you want to sell. It is not clear enough. Unless we have a structure, a clear structure like this, then I can say I want to sell from here. Can you see? So if price is coming back, price is going to raise this high. So we are still waiting for confirmation. So I don't have a clear structure. So if I'm using this place, it's a trap because I only have a break of structure, and the structure is like a single structure that is not clear yet. So I'll be waiting patiently. Now price entered this high. Let me delete this thing. Our supply zone, sorry. Price entered this amount of liquidity. You have what? Imbalance. So if I'll be selling, I'm going to take myself from here. To where? To that last low. To that swing low. It is very difficult for you to swing this kind of trade. Because there are some scenarios you need to target here. All this, you mark this structure, break of structure, unmitigated and mitigated everything. You mark it out so that you won't have delay when you are trading. Now let's see. Tonight supposed to. Okay, don't pay me low for ever move for me, Joe. You don't pay me for and very Yahweh and one class now. I'm coming, please. So this is going to be my words, my point of interest. Scan sheet this. I'm coming. I'm sorry, guys. So let's continue. Can you see? That's my entry. Can you see the way I waited for confirmation to pick my entry? So at least I'll be targeting this not this full low. Me say I cannot target it. I won't lie to you. I'm an inter-trade trader. So if I be targeting, this will be my what? First what? Take profit. That will be my first take profit. Then this low will be my what? My last take profit. Can you see? Can you see the what they did here? Now, what they did here was, I tell you something like you need to start marking your what? Your structure. Now look at this structure. Break of structure. This is what? Break of structure mitigation. Another break of structure. The one I told you then. The breaker block that got mitigated, and this all mitigated demand. That's why I said you don't need to choke with your what? With your technical analysis. The break of structure or mitigated structure or the one that has been mitigated, or you don't need to joke with them, because there are sometimes you might be targeting far place, and meanwhile the price is giving you another place. So at least that's why I said if you have a trading plan, okay, today I don't want to do more than 50 pips. As when you are targeting 50 pips, you're out. Okay, today I don't want to do more than 70 pips. As when you are targeting 70 pips, you're out. Now, if you are targeting far place, look at here. Price got here what? Reject. At least 82 pips for that is enough. And see the way you got the entry. See the way you got the entry. Let's go back to 4 hours. Now we have this area.
Class is skipping. I'm in there.
Your network, I guess. Yeah, this place. I told you at first this place is going to work. This place is going to work at first because it has come to a stronger. Though it should be an inducement for this place, but because it's under liquidity before going, a short sell. Let a short sell will occur from there. Now this is the proper zone that we are supposed to use. How am I going to mark it? This long candle is my supply zone, but I will not mark it like that. I'll mark it from this one that it broke from and the back. Can you see? Then I will wait for confirmation to trade it. If I don't see confirmation, I will not be trading it. Can you see? Price take it out before coming back. So yeah, on shorter time frame, there will not be a confirmation. There will not be confirmation. That's why price took it out and sold. So for price to take this thing out and started selling, we have out of this eye. We have out of this eye. If I'll be targeting low, I'll target this low. I'll target this low. Because I have on from 4 hours time frame. But if I'm targeting safe, you can say I'm not. If I'm targeting safe, I'm going to take note of all my zones that can cause delay. Now look at this place. Look at this candle here, 4 hours candle. The week I told you about area of transaction. Can you see? Price got there and reject. So even though you are selling, just know that you will be taking your profit out of those valid zone that that price can clear them out. Then when price break this place, you can look for another continuation sell. So because you are looking for price to come to this low, doesn't mean price will get there. And meanwhile, we are not in a downtrend, we are in an uptrend. Can you see higher high, higher low? You need another higher high. So all these are just retracement. But I'm only telling you how to mark your supply and your demand. So new students know, old students knows about this area of transaction, but new students no. So I will send the video to the group and the old videos to study. Then tomorrow we'll talk Net- I'm back. So network. Oh, my network don't spot tonight class. So I'm coming, please. I'm on network. Oh. So before I proceed, please, if you have any question now. If you have any question, please. Oh, hey God, network. Okay, let me end the class.